Hey guys, welcome back to Smart Wallet and me, where financial wisdom matters. In today's video, I want to do a stock analysis on AT&T and let you guys know some good news about it breaking out of the 20-day moving average. So let's get right into it. Okay guys, here's the stock chart for AT&T. You can see here the green line is the 20-day moving average and the purple line is the 50-day moving average. So if we look here, the 50-day moving average is around 28.38. And the 20-day moving average is 29.79, and we are currently trading at 31.01. And you can see here that the trend line has been broken, and we have broken out of this 20-day moving average, which is a very big deal because the last time we actually broke out of the 20-day moving average was around the March level of this year, when we were trading close to around $37 to $38 per share. And then it dropped down to around $26 whenever the coronavirus hit in March, the end of March of 2020. And it has been trading pretty much sideways. It went up about to 32. And then it's been trading sideways below the 200-day moving average and going up and down the 50-day moving average. But right now, it is trading above the 200-day and the 50-day moving average, which is very good news because it seems like it has broken out. But we need to see it retest this 200-day moving average again to hit the 29.79 level before we can say that this is going to break out completely and go above from here. So the resistance right now is $38.53, which is the March high, and the support is around $30.14, which is around the 200-day moving average. And you should have a stop loss at $27.53 if you want to protect your assets. So guys, I want to show you my spreadsheet here of what I see my high estimate for this stock of $33.33, my low estimate of $29.90, and my average is $31.92. And the way I get this is by plugging in the earnings per share with a surprise growth rate of 1%, and we get a new high earnings per share of $3.33. And when we plug that number over here and we get a P/E ratio of 10 and we multiply these together, we get the stock price of $33.33, which is a 7% increase from where we are currently at $31.01. And my low estimate is around negative 3.7% from where we are right now. And my average is around 2.8% higher than where we are right now. If we look at tip ranks, we could see that from their analysis, based on 17 analysts offering a 12-month price target for AT&T in the last 3 months, the average price target is $30.85, with a high forecast of $38 and a low forecast of $24. So they have a moderate buy on this stock currently. And I wanted to share this article with you guys from Seeking Alpha called AT&T Breakout Confirmed. And according to this article, it says that the AT&T is currently breaking out over the 20-day moving average in a strong move, yet still remains undervalued. AT&T is working on reducing its debt by selling off assets, but still has a long way to go. And just to let you guys know, AT&T has always had a problem with their debt. That has always been an issue for them, but yet they have maintained their dividends, and that puts them in one of the categories of the aristocrats when it comes to dividend paying stocks. So that's one thing to take into consideration. Even though they have a high debt, they still pay out their dividends, and they're growing as well on top of that. And all eyes are on HBO Max, as Wonder Woman is set to release on December 25th, which is very good news because a lot of people are going to be home and a lot of people are going to be streaming some movies, so that should be a good revenue source for them. So going back to the debt here, I wanted to let you guys see what's really going on with their debt. As we can see here, from 2004 to 2019, the end of 2019, their debt has gone up to $180 billion. That is a lot of debt for them. They've always struggled with that, but it looks like they are now trying to sell off some of these assets to get some capital going. And we can see that in the early 2000s, everything appeared to be under control, and then Randall Stephenson came in and took the helm. The 13-year CEO wanted to see AT&T turn into a full-on media company, and to do so, he started acquiring anything he could get his hands on, and that caused them to get into a lot of debt, unfortunately. And the company continues to sell off assets now to help reduce their debt, and this is a very good move because they need to get a lot of revenue coming in. And just today, the rumored deal for Crunchyroll and streaming service to Sony was announced. AT&T is getting 1.175 billion in cash for the streaming service, which is significant. This landed higher than the reports of $957 million, but below AT&T's rumored ask of 1.5 billion. Either way, this is a big sale for them, and it's going to increase their revenue, and I think it's very good news for them. And just today, they increased their dividends to 52 cents per share, which is another good news for them if you're holding this stock. So because the world continues to revolve around streaming services thanks to COVID-19, movies have been delayed and canceled in some cases because of the movie industries, and a lot of places are shutting down. But yet there's also good news because a lot of people are now streaming movies and watching movies, so that's good news in one way as well. The only bad thing about this is that you need to have new content, and to create new content you need to have new productions going on, and that is the struggle that a lot of production companies are dealing with. But with this HBO Max, I think, coming out, it is running full stream ahead with Wonder Woman on December 25th, and that should be a good source of revenue. A lot of people will be watching movies, I'm sure, while they're at home. Christmas is usually a hot spot for movies, and AT&T is betting that trend isn't going to go away regardless of COVID. And it is going to be very interesting to see how the film performs on the subscription service. And HBO Max now has 38 million US-based subscribers and 57 million worldwide subscribers. And of note, 38 million exceeds the previously announced year-end target of 36 million, which is significant, and I do think that has been a benefit of COVID-19. And according to their dividends are growing. They don't have any issues with that. So guys, looking at their AT&T dividend is at 6.78% yield, and they have a 5-year growth rate of 2.09%, and they've been growing their dividends for the last 20 years. And like I said earlier, this puts them in the aristocrat category because they've been paying dividends consistently, even though they have a large debt according to their balance sheets. But yet they have a payout ratio of 65.6%, and they have now increased their dividends to 52 cents per share, which is great, and they pay on a quarterly basis. And you can see here their dividend growth has been growing over the years from 1995 all the way to 2019. They've been growing their dividends consistently, and they have had no issues whatsoever to be able to pay that debt. So this stock would be a really good hold for their dividends. You may not see a great increase in the equity price and the stock price, but if you want consistent dividend paying income coming in passively every single quarter, then this would be a good play for you if you think that this stock will be growing over the next few years. On a fair value basis, which uses 10-year forward-looking levered free cash flows, we can see that there is obvious room to run here. However, I do not think this stock will be at $68 anytime soon, because they're saying that this stock will be $68.33, and right now the current price is around $31.01. They're saying that it's 54% undervalued. So this person is saying that they don't see this stock running up to $68 anytime soon. That would be an all-time high. It has never been that high before, but you never know. Things could happen, and it could run up that high. And technically speaking, we saw a very important cross this week. The stock broke through the 200-day moving average, as I mentioned earlier, which is a good sign. So guys, let me know, what do you think about this stock? If you think that this breakout here is a good thing, and if it tests this level again and it continues to stay up within this level and goes around above the $31 to $32 range, and if it keeps going higher and it passes the $38 range, we could see this pass even further, and their dividend growths will even grow higher than where we are right now. So guys, I would love to hear what you guys have to say, if you agree with this or not. Let me know if you're holding AT&T. It's a big solid play for dividends and passive income. I would love to hear from you guys, and if you guys enjoy videos like this, please give me a thumbs up, and I look forward to seeing you guys in the next video. Thanks for watching.